Those are the Beartooth Mountains.
Okay. In Montana? Is that Montana? Okay.
Yep.
All right, we're letting people in, letting the first 20 in. All right, shall we get started?
Yeah, let's.
I'm very excited. This is Boroughs and Burbs season 2. This is episode 7, and this is the ranch show. And when we put together the ranch show, we said, what if we throw a ranch show and nobody comes? But apparently that's not going to be the case. A lot of people have expressed interest in learning about ranches in the West and finding out what's going on in the West. Maybe it's people like me who just see a whole lot more Montana and Wyoming license plates in the parking lot here in New Canaan, want to understand what's going on. So I'd like to begin by introducing Keith Gertzen. He's the one who introduced me to Montana. He went out, I guess, 20 years ago and bought his first ranch in North Dakota, assembled a few more ranches around him, and eventually assembled a 20,000 acre ranch and sold it, and has since bought, I guess, several ranches in Montana. And so he was the expert I called first. And when I called Keith, he said, well, it wouldn't be much of a show unless you called Kim Bennett. She is the best appraiser and has been working this industry for 30 years in Montana. And so you should ask Kim. And so maybe Keith, maybe you could tell us why Kim's on the call. Introduce Kim.
Yep. Thanks for having me, John. And yeah, it's a thrill to have Kim on today. And I've known Kim for many years and really do look to her as the true subject matter expert. And Kim's background is really, I think, unparalleled in many respects with her experiences starting in appraisals and farming, and obviously moving on over the last 30 some years into ranches and recreational properties all throughout Montana and Wyoming. She's been selling real estate with ML Properties, Century 21 ML Properties, for about 20 years as well. And, really has been a great partner, for me and a number of, people in Montana over the decades. And I'm sure many people on the call have worked with Kim as we see some of the invitees coming through. But yeah, it's a thrill to introduce Kim and look forward to the discussion today.
So I guess the first question is, and I guess I'll ask Kim, what's a ranch? Is it just any big piece of property?
Oh, well, there's the economics that play into it. Is it an economic unit? What size is the operational boundary? And if there's a desire to have a cash flow from cattle or crop income, you would have to have something larger, 1,200 up to 30,000 acres, 1,200 acres to 30,000 acres. Under that, and that would be probably dry crop farming if you're in that 1,200 acre range. But for cattle these days, you need quite a bit more for it to be economically profitable. But
how big do I need to be economic to have a cattle ranch, a real cattle ranch?
Oh, probably in that 20,000 acre, 15 to 20,000 deeded acre range, something like that, to run any size of herd that's going to be profitable. And a lot of people are doing different kinds of management strategies now to improve their properties, do more regenerative agriculture, intensive grazing, those types of things to kind of help with the carrying capacity of the ranch. So those are our more agriculturally oriented buyers and people. But in from the western part of the state to the central part of the state, we have, a whole different character of buyer that's been in the market for the last 20, 25 years, rural recreational investment buyers. And they tend to think of a ranch as anything of, 640 acres or above. And some people even down to 160 acres in their mindset, because a lot of them are coming from out of state, but they're
Hollywood.
not. Yeah.
And New York.
Yeah, or New York or Georgia or Texas. They're emotionally connected to being in Montana, the mystique of Montana. they want space. You can't get these kind of spaces out east much anymore. So, and having the views and the water, live water, and all of these amenities are very important to the recreational investment buyer. Doesn't mean they won't run cattle or grow crops, and they'll do that for some income, and the income that gets generated on these recreational ranches pays usually for a manager and some repairs and maintenance and the taxes, real estate taxes. But it's mostly a personal matter. People are wanting to be out in Montana.
So let's orient ourselves. What are the mountains behind your head, and what are the mountains behind Keith's head? Is it all one set of Rocky Mountains?
No, the mountains behind my head are called the Crazy Woman Mountains, and they are an island mountain chain that is between Livingston, Montana, and Big Timber, Montana, north of the interstate there. And then south of there is the Beartooth Absaroka Mountains, and that's what you see behind Keith is the Beartooth Mountains.
So Keith, you told me you had 5 criteria when you were moving from North Dakota to Montana that you were thinking about, not just the amount of cattle. You had a word for that, but you had 5 things that you were thinking about that would translate to value in your mind. What were they, and what was your thinking in terms of moving to the Beartooth Mountains?
There's always been a number of factors that we've looked at when we try to make a decision on what we think will be a place that we want to be and spend time. And a lot of that was driven by recreational use and some of the things that we like to do outdoors. But then it was sort of, what are the other sort of amenities and attractions to the area that you're in? Some of them being sort of close proximity to a national park, close proximity to a town, looking at specifically an airport so that you can get to and from. And as everyone knows, getting to these places can be quite difficult if you don't have direct flights, or you don't have the benefit of a private aircraft, which in many cases is necessary to get to some of these places. But the other real factors that we look at are views, having a viewscape of mountains, close proximity to a fly fishing river, so you can get to a place to fish, and a ski resort, being within an hour or so of a ski resort. And so those are the things that we looked at. And if you look at many areas in Montana, and certainly they're not undiscovered, and if you draw sort of a radius of 100 miles around certain areas like Bozeman or Missoula, you'll pretty much check all those boxes. And so what we specifically have always done is sort of look on the periphery of the really hot areas, the areas that are already well discovered and have been for the last 30 or 40 years. And clearly today things are getting a lot more active in those markets, but it's driving buyers, and it's finding new entrants into the market. People are looking in the, I would say, less desirable areas, although I would say that there really isn't a less desirable area in Montana. It's just, you may not have those mountains behind me that you're looking at, but you may have an equally beautiful viewscape and have all the amenities, or many of the amenities that I was talking about. I mean, when we can talk about segmenting the state into different, pieces. And I know in our pre-call, we talked about, why Montana versus other states, Wyoming, Colorado, Idaho. I think if you look at the topography of the state, Montana really does offer fairly unique, sort of topography. It is, the 4th largest state in the country by geography, but also has this just amazing abundance of mountain ranges and viewscapes that I think are more unique in many respects than some of the other states. And I'm sure people on this call would argue the contrary. But if you look at just sort of the diversity, and then if you look at the amenities from a public standpoint with national parks, from Glacier down to Yellowstone Park, it's got a massive amount of recreational and viewscape opportunities. So I do think it's unique. But as you move east, and we can talk about that a little bit more, you have the great sort of upper plains of eastern Montana that have a whole different dynamic, and some of that is more agriculturally driven, and you'll see that where the investor interest there may be more oriented towards agriculture and different types of hunting.
Keith, does that topography continue up into Alberta? What you
Yeah.
see in Montana, it's the
I
same?
mean, it depends if you look kind of east and west, but as you get east of the Rockies, and that really starts around Billings. If you look right in the middle of the state,
Yeah.
east of Billings, you're sort of in the upper plains, and that landscape looks very similar. You do have some of the breaks and the badlands in certain sections along the Missouri, and all the way over to the eastern part of Montana and southeastern Montana. But for the most part, that land looks, fairly similar. Obviously some differences, but it's flatter there. And as you get north and west of Billings, it continues to run up that line where behind Kim, the Crazy Mountains, and those ranges go all the way up into Canada.
So what's changed in the last year? Let me just correct me if I'm wrong, but the appreciation of land has averaged, of ranch land in Montana has averaged 8.8 over the last 20 years, 8.8% growth. But I believe Keith told me that in the last 2 years, you've been running at 20% growth, more or less 17%, somewhere around close to 20% growth. And I'm wondering, well, so what's changing? I mean, it's been growing steadily for 20 years, but now it's growing crazy. Why is that?
Well, you have to go area by area, really. I mean, some areas have actually seen in the last 2 years 50% increase, or 100% increase, on in certain areas, and so other areas are in that 12% to 15% range the last couple of years. Demand.
I suspect the recreation people, the people like Keith who say, I want a ski lodge and I want it to be convenient and commutable and with a beautiful view, those people are driving the 50% growth, right?
Well, it's demand, supply and demand. The supply is very, very low. In the last 18 months, the amount of properties that have come on the market has been half of what's been going out the door. So it's just demand, especially in these high amenity areas like the Paradise Valley and the Bitterroot Valley and northwestern Montana and the Kalispell area. So there's a lot of demand for these scenic properties. And so it's just, we've been found, we've been found on a different level now. We were found back in 2005, 2006, 2007, and now this is at a whole different level. And the pandemic really created a rush, especially in the residential market out here. We had people buying houses sight unseen all day long for 12 to 15 months. That's kind of slowed down now. But the average home price in Bozeman, Montana is now, in Little Bozeman, Montana, is now approaching $800,000 for a house in the city limits. And that's just the average. So, and in that general area in the county over there, the prices, the average prices are approaching $1 million just out in the county area. And it's flooding out into all the rest of the state as well. The same kind of things are happening in Kalispell and Missoula, and Billings was the #1 emerging residential market in the nation last month. And so it's just a whole different level.
So from a standpoint of the buyers that you're seeing, I mean, I can imagine that there was always the demand for people who wanted the agricultural operation of a ranch. That's always been probably solid, consistent for decades and decades. But now it seems that people want to enjoy the land and the value and really just want to pass it on to their children. And during
Right.
COVID, of course, it was kind of an escape, and it was a haven for safety in some ways.
Right, it was.
But it's almost like my brother's a biker, and he just, over the past decades, he was like, all the people in the biking community were so upset because all the doctors and the lawyers are having midlife crisis, and they started buying, Harley Davidsons, and the prices just like shot up. Is that who the buyer is now? It's just, there are people where so much wealth has been created, it becomes a bit of a vanity play where they just want to have that in their portfolio.
I think that's a big piece of it, Roberto. And I think that what we've seen out here over the last 20 years, when the stock market starts being a little volatile or, not acting very, very stable, we see people that really want to park their money in Montana. They want to have hard assets on their balance sheet, so they come out here and buy land and buy properties. And, they're in it for a long-term hold. Like you said, a lot of them want a legacy property where they're buying a ranch and they're going to hold it for a minimum of 20 to 30 years and pass it on to their heirs, and then the heirs have to deal with the ranch at that point. One of the trends we saw right before the pandemic was we were seeing less and less younger people buying ranches. It was still the guys that were in their 50s, 60s, they still wanted a ranch. So they were out here buying, and people were kind of concerned about, the younger people wanted more of a big sky condo where they can lock it up and leave for 6 months and not have to worry about it. But what we've seen in the last 2 years, those people have moved back into the ranch market. The younger people have moved back into buying ranches as well. So at that space, they want the social distancing, the ability to recreate outside on their own place without running into a bunch of people. And it's just the privacy of it.
Are any of those people dealing with the agricultural operation, or are they hiring a third party? Can you do that? I would imagine that, if I was someone who was looking for ranch, I don't know anything about how to run it, but I would probably be very interested in all the peripheral aspects of it, but I wouldn't know anything about the operation.
Well, a lot of them do come in with an attitude of learning, and a lot of times they'll keep the previous owner there, and they'll build their own larger home or a home that they want, but they'll keep the previous owner there to run the property. And sometimes they'll hire a manager or they'll lease out the property there are a lot of farm and ranch families that like to take on leases and run cows and hay and make hay and farm. So they can lease it out. Leasing land is a pretty easy thing to do here. There's high demand for that. And then once they buy it, they'll usually participate in, say, branding or harvesting, or they'll have that experience, where they'll learn more as they go along. But yeah.
So Keith, tell me about operating a ranch. How many cattle did in your either the current ranch or the last ranch, how many cattle did you own, and how many of other people's cattle was on your land? And did you lease other lands around you in order to run cattle?
Well, in the Dakotas, we started off pretty small, and it expanded over time. We had what we call a registered herd of Angus cattle for a number of years, and that was in the 200 plus mother cows. But over time, as we expanded, and the partner that I had, we ended up rolling up a number of the other ranches, and then really running my cattle partner running, at one point 800 mother cows on that ranch specifically. And over time, that number sort of ebbed and flowed, and we did sometimes partner with other ranches, lease other ranches. There was a collection of over 36,000 acres that we participated in on the lease. So there's ways to expand it and grow it. I think that's becoming increasingly difficult in all aspects of the West. But depending on the scale and size and the amount of commitment you want to put in, both financially and from a time perspective, there are those options. There are clearly a lot of people that buy ranches, and probably, I think many coming from out of state that have this dream and this vision of owning and operating a ranch. And then when you get into the complexities of actually doing it, the time commitment, it's just like owning any home. There's just an element of commitment, whether it's, dealing with utility issues or a broken refrigerator. When you're talking about a ranch, you're looking at, issues with cattle and management and fences and water, tractors, equipment not working. The daily calls that you get can be pretty daunting. So it is a process. It does take, I think, a fairly rigorous approach to managing a business, because ultimately it is a business, and like any business, you can buy it as a limited partner or participant and have very little to do with it, or you can get super involved with it. I'm on the other end of the extreme, and there are partnerships out there that you can participate in, again, as simple as an investment partnership, or get really involved with the cattle selection and the rotational grazing patterns and the type of cattle that you put on the property. and get involved with everything from moving the cattle to shipping. But it's all levels of in between. But I think the vast majority of the newer buyers that want trophy properties are finding an outsourced solution. They find a tenant that they lease to, usually second, third generation Montana family. Many times they've already operated on the property or have an adjoining property. They know the country and are more than willing to pay you a per acre lease on an annual basis or a multi-year basis, and you can just collect the income and call it a day and enjoy the property. So all levels of commitment.
So some people will even do it. They'll do it just enough to kind of defray costs, where it's not something that's tremendously profitable. It's just kind of, it's part of having a multidimensional aspect to your ranch. That yes, I have livestock. I have.
Right. And I think if you look at the income sources as an investor, you need to recognize that the prices that you're paying, and if you're looking at it from a cap rate perspective, relative to those cap rates historically have been in the low single digits, and that's a struggle to get there today. But if you assume that you can generate a 2% cap rate on your investment, that 2% for the most part covers a ranch manager, some level of employee on the property, some of the externality costs of fencing and repair and taxes, which are very low in agricultural communities. The tax assessment's not based on the price of the property, but it's on the sort of the ag value per acre, and it's a much lower number than what we've used to in New York or Connecticut or New Jersey or Florida, where the property taxes are super high. So you can cover a big chunk of the sort of the initial expenses, but it's not going to pay for the principal and interest payment on a note if you have debt on the property by any means.
I can't borrow money. I can't borrow $10 million, go buy a ranch in Montana, leave it alone, and cover my mortgage. I'm borrowing money at 3%, and you're telling me that I'm going to expect maybe 2% only on a cap rate, on a cap rate. Is that right? Unless I start thinking about cattle or other sources of revenue.
On agricultural income, but most of these rural recreational investment buyers know the history of Montana. Montana is about 65% public land, so we're not making any more private land in Montana. And the more the demand and the less supply, we have high interest, and the appreciation over time is where they're gaining when they go into this long-term hold, the appreciation over time, the steady appreciation is where they're getting their return on investment.
And that's the number we referred to earlier as 8.8% over 20 years.
I just did a study in Muscle County on sale resale data for ranches up there, and the lowest sale resale I had was 17%. They were clear up to 52%. So it's and that particular area has been found recently as well in the last 5 to 8 years for elk hunting. So elk command a premium when you have elk on your property. People love to elk hunt. They come out here and buy a property, and it has to be over 640 acres because you can't get an owner preference hunting tag for elk with under 640 acres.
Is there any sort of measurable component of like an Airbnb type of thing where people say, I have this amazing ranch, you can go rent it for 4 weeks, in October and do all the fishing and have your family in it? I mean, does that measure out to anything?
Well, we have historically had guest ranches in Montana since the 1800s, the late 1800s, and in Wyoming as well. And there are still some viable guest ranches that are working here. A lot of them have been sold and are used for private retreats and corporate retreats. And
Roberto, they're not on Airbnb.
No, I know, but I just, conceptually, the idea of would housing of some sort generate any sort of income component that would increase your cap rate of any sort, some sort?
No, not substantially. There are people that do rent their cabins and things like that for Airbnb, but I don't think it adds substantially to it. you're still going to keep going back to that appreciation and supply and demand over time is what.
Can we just go back to the buyer? I mean,
Sure.
I'm sure there's been a tremendous influx of people coming from, I'm sure, everywhere, all over the country, people are coming. But is there one specific region where you're seeing so many people coming from, say, New York, or like, because in our market, there are times when we see a tremendous amount of Russian buyers coming in, or Chinese buyers. There are the foreigners. I mean, are we the foreigners that are coming in, and then, or do you actually see any real foreigners
Oh
come?
yeah. We are in a national and international market here. In the past, we've had people I've worked with that have been from Switzerland and France and, various other places around the world. They come and buy ranches here. And New York, the New York City people have really participated in our market probably almost the longest of any group. And, I have a lot of clients I've worked with over the years that are right on Madison Avenue, their offices. So they have been here the longest, and they've also been the ones that have really supported the conservation effort in Montana, the conservation easements and the conservation effort here, and also the folks from San Francisco. So we've had a lot of people that support conservation from those two cities. And I do about probably 60% of the appraisal work I do is conservation easement work. So, and just on more, the latest kind of trend is Texans. We've got a lot of Texans coming here, and that started about 2010. So Chicago, quite a few people from Chicago, Atlanta area.
Do the Texans come with big hats?
Big trucks.
Big trucks.
So yeah, I mean, there's always been that interest, and of course, when we had the River Runs Through It movie and the Horse Whisperer movie, that was a big deal that brought in quite a few people. They saw the scenery, and part of the Horse Whisperer movie was filmed right here in Big Timber, where I live, and south of town. So it's it's the mystique. There is a Western.
Hollywood plays a role in all of these markets. Sex in the City for New York, everybody wanted to come. These types of movies. I was talking to John about Connecticut. I was like, you need a really great show for New Canaan, about just the quaintness of just how beautiful it is, like a 30-something show, and everybody's going to flood there.
Yeah.
That's assuming that's what you want. I'm not hearing that Montana is entirely happy with the latest wave. Are you? Is the culture changing with all these outsiders?
Well, it is. We're just, 10 or 15 years ago, if you ask somebody, or 20 years ago, why are you moving to Montana? Well, the beautiful scenery and the people are so nice there. Everybody's really nice, And now it's just the pace of life. If people are moving here from New York and Seattle and San Francisco and LA, and, we have a lot of tech industries here, especially in the Gallatin Valley, that have moved in from California. And you get that fast-paced energy coming in here. It just changes the whole energy of the state. People are just on a different gear than we ever were. I remember when I first moved here 30 years ago, I thought, wow, these people eat really slow. But, it turned out to be a good thing for me. I lived a lot slower life, but it hasn't been like that lately. It's been quite a lot more manic.
So you're too nice. The folks in Texas make no bones about it. They say the California influx is ruining their state. Joe Rogan every day, and he came from California, says it's a big problem when all of California has suddenly discovered Texas. You're so nice about it. If the worst thing you could say is that they eat too fast and they bring energy, I mean, that's nice. That's Midwestern nice right there.
Well, yeah, and they're just not, it is. We just keep setting a good example, hoping for them to see that. But we started to see a trend before the pandemic of people not wanting to buy these huge homes on ranches. So a lot of these people would come in 20 years ago and they would build a 12,000, 10,000 square foot house, And then all of a sudden in the last 5 or 6 years or a little bit longer, we started seeing people say, no, we don't want to buy that. We don't want that big house to take care of. We don't want the energy bills. We don't have to clean it and all of that. So even some people tore them down. You know, David Letterman tore down a 12,000 square foot log home on a place he bought because he just didn't want it. And so a Texan moved in north of me over here, and they're now building a 20,000 square foot lodge with an indoor outdoor swimming pool. So it's kind of like, it does get to 40 below zero here, you know. I guess they'll figure that out at some point. But yeah, so I can share a little bit about appraisal if you want or not.
Yeah, the most fascinating thing that I learned was that you are in no disclosure state, and that you can't just go down to the courthouse and look up what everybody paid. And because all the realtors on this call and on our database who got the invitation today, that's what we rely on. We rely on big public databases of what everybody paid, and our clients have access to that. And so we, in order to add value, we have to have gone into many of these homes, many of these apartments, and be able to tell them something more than the database can share. But you don't have the advantage of being able to look up a public database. Tell me more about that. Where do you get your information?
Well, from building relationships with people for 30 years. We're non-disclosure state. Wyoming is non-disclosure, Idaho is non-disclosure, and New Mexico. So there's 4 of us in the lower 48. And I think that Alaska is as well. But so yeah, no, you can't just go into the courthouse. There's no tax stamp where you can back into the number like in California. There's nothing in there that tells you what the property actually sold for. So you have to pull a deed, call the buyer or seller, or be in touch with their agent. And with the multiple listing service that we have here for residential, you can use that for residential appraisals, but any property over 160 acres is not required to be reported on the MLS. So we're kind of out of luck for that. So we have to know somebody involved with the transaction. We have to be able to try to get a hold of the buyer or seller, which that's very difficult these days because a lot of them don't have landlines and they all have cell phones. And so it's a detective job, detective work. And what
incentive would they have to share with you? I mean,
they have no incentive. I have to plead my case almost every time, and so a lot of them will buy a ranch and then they'll want some estate planning appraisal done later, and then I'll get the price a little bit later or something like that. But a lot of this, I have to either be part of the transaction, know someone that's part of the transaction, or figure it out through the back door. But it's very difficult to do appraisal work here. It's just hard. There is a multiple listing service for ranches that my friend Andy Ron started called Montana Land Source, and I can share my screen and show you that. But he doesn't report any sales prices. It's just okay, share screen.
Well, how can a realtor do his or her job if my client says, I think I'd like to buy this $20 million ranch. What do you think? As a realtor, if I don't know, I guess, sales in the last 6 months, sales in the last year, comparable sales, how can I provide any advice whatsoever? So
well, they have to call people like me. I've been keeping a database in Montana and Wyoming since 1989. So you kind of have to reach out to the other professionals and try to find out kind of what's been happening. So this website is a great website for information, montanalandsource.com. These are live market statistics. So right now on the market, we have 412 properties that are over 200 acres that are for sale. The new listings in 2021, we've had 213. So you can see that number is down by 72% from last year. So we just aren't, the properties that are coming in versus the properties that are going out is just substantially lower. We just are really low supply right now of properties. And our days on the market is way down 159%. So we've had 341 ranch properties sell in 2021 year to date, and that is up 33%. So We're just not getting the listings. We're really low on listings everywhere. So this map over here that you see is showing all the red is listings, and I can pull up the map itself.
So according to that chart, $2,000 an acre, and Keith's sitting on, I think you said 20,000 acres. So Keith, I'll give you $40 million for your ranch. What do you say? Am I overpaying? The scary thing is I have no idea because there's no database to compare it to.
Right.
So
Wow.
here's where we have to go in, and we can go into any given area, and the properties that are in red are listings. The properties in yellow are pending sales of property 200 acres and above. And the black are all the sales that have happened probably since 2010. Andy started doing this. And so, and then you can just click on each one and kind of see that was a $45 million sale. This is the one that just sold this year for, set a record, $136,250,000. The property was in 5 units. It was called the CA Ranch. And
Was that the one in the movie?
no, well, yeah, this part of it up in the north, this bigger piece of it. And the buyer of this ranch was from Texas, and he also bought this ranch right here in Big Timber right before that. Then he came in and bought this ranch. And this ranch had been a family cattle operation since the 1940s. And within 2 months, he dismantled the whole property. He sold off these 4 smaller tracts already, and he's keeping this larger unit up here for recreation. And he's made money on all 4 of these that he's sold off. And that was since September 1st.
Does it exist where you get a better per unit price the larger you get? Like per acre?
No, what's interesting is a lot of times you'll get a higher price per acre for a smaller property, and that's true under 640 acres probably. But once you start hitting that 640 to 1,000 acre price in certain parts of the state, there's really no difference for size because people just want the land. So we see a bifurcation of the state. Lewistown is right here. It's the center of the state. And the western part of the state, you can see all the mountains out here in the western part of the state. So what we've seen over the last 30 years is the high prices started happening over here in the west. And as those lands become in less supply, the demand and the prices start to go up as you move eastward across the state. And so like Lewistown, 10 years ago, you could still buy a place for $800 to $1,000 an acre. And now it's $2,000 to $2,500 an acre for any kind of recreational ranch in that area. And you can see it pressing in on the eastern part of the state over here. So we say Montana is one town with a lot of long streets. We only have 1,090,000 residents in this whole entire geographic area here, but we have a lot of second homers. We have a lot of out-of-state owners and all of that. So
where on the map is your Crazy Woman Mountains and where is Keith's Beartooth Mountains?
Yeah.
Okay. Right here is the Crazy Woman Mountains, an island mountain chain. And this is Livingston, and here's Bozeman right here. Everybody talks about Bozeman probably in New York City. I know they do in San Francisco. And then I live here in Big Timber, just north of town.
So Bozeman is looking at the view from Bozeman is of the Crazy Woman Mountains.
No, it's of the Bridger Mountains right here, and the Bridger Mountains. And then there's the Gallatin Range, so it's just south of Bozeman.
Just for perspective, how far is Bozeman from this, would you call it Lewis?
Lewistown?
Yeah. No, right in the center where you were before. Sorry.
Livingston.
Livingston.
From Bozeman to Livingston, that's about 25 miles.
Okay.
From Bozeman to Livingston. Then I live over here in Big Timber. And then Keith is clear over here in the Red Lodge area. So right in here. So he's looking at the Beartooth Absaroka Mountains, which are right here. And Red Lodge has its own ski area and it's a very beautiful place too. And so I heard an anecdote the other day that every residential lot that was subdivided prior to the 2008 recession in the Red Lodge area is completely gone and being built on right now. So same thing is happening over in Three Forks, Montana. It's in 3 counties right here, and Broadwater County has a really low tax base and rate. So all this area over here is a bedroom community to Bozeman now. People are building huge homes on 1 to 5 acre tracts over here that are selling, you know, from $525,000 to $800,000. So it's a lot of development going on through this corridor right here.
Are there any urban centers here that are trying to or leaning towards becoming something like an Aspen or something like that?
Well, yeah, I mean, there's Big Mountain up in Kalispell, which is up here. Oops, sorry. Big Mountain up here by Flathead Lake, and then Big Sky, which is down by south of Bozeman, about 40 minutes. It's
and you can fly directly to these 2 locations from New York?
No, you can fly to Bozeman direct from New York, but I don't know about Kalispell.
Let's just say for the uber wealthy who have their own planes, et cetera, do they have landing strips on these ranches?
No, but all of the smaller airstrips, like in Big Timber and Livingston, have expanded to accommodate private aircraft.
Are they not permitted?
To land on their ranch?
Right.
Well, there's a ranch down in Carbon County where the gentleman has his own beautiful paved landing strip and hangar. So he can land his private planes and private jets there, but there's not very many people that go to that expense. They push these local areas to expand their airports, and they have. Now, Bozeman doubled its size of its airport 6 years ago, and they're doubling it again. It's the largest volume airport in the state, surpassed Billings 7 or 8 years ago. But there's numerous new hangars being built there. The airport's actually right in Belgrade, right in here. They fly in there, they get into their car, and they go down here to Big Sky, and they have they're either have their own condo or whatever in the Big Sky area, or they're up in Yellowstone in the Yellowstone Club.
And that's like a 30-minute drive?
About 45.
Okay.
So we've talked about recreational buyers who, like Keith said, they're interested in a view, a ski lodge, and most importantly, and now I'm hearing, an airport. You got to be, you have to be able to get there from LA or New York or Dallas. And then we've also talked about a whole separate class of buyers, which are agricultural, who are going to run cattle, and they're interested in how much water and what's the quality of the grass. And they're not interested in the view because it's mostly enjoyed by the cows. They're considering it for its agricultural value. Keith mentioned to me there's a whole nother category of buyer that's come into the market. One is the Mormon Church. They've bought 1 million acres recently. And another one you said was NGOs, who've bought another 1.2 million acres in the last couple of years. What is the motivation behind NGOs buying land, and what kind of land are they looking for?
Do you want to answer, Keith, or?
Well, I think you're much more. I'm only seeing the sort of the ramifications of that participant so much land and creating scarcity and also driving prices up because they have maybe a 50 or 100-year outlook, or at least in the case I think of the Latter-day Saints. But this new entrant of APR, American Prairie Foundation Reserve, they have become a new entrant, somewhat new entrant that I've run into, and really Kim has educated me on their presence in some of the areas of property where we've been looking, and they've had sort of a disproportionate effect on creating scarcity and driving prices. They're looking for much larger ranches, and John had mentioned in the pre-call that oftentimes they essentially eliminate the interior fences of the ranches, and they put bison on the property, and they're really trying to get it back to sort of its natural state. I just, the only thing I throw out as a comment about that is, and it's something that I think has created maybe some animosity and tension. It's just me as a as a resident saying that they have a direct impact, and I think negatively, on the financial viability of family ranchers and people that want to stay in agriculture, because every one of those properties that gets bought and gets taken out of cattle ranching and what is really the lifeblood of a lot of the agriculture and the families in Montana are essentially being depleted of those properties and that opportunity. So it does have a profound impact on the future of family ranching in Montana, and something that we're keeping an eye on.
Do they make a conservation argument? Do they say that what they're doing is healthier for the land than ranching? Or they don't buy it, they don't have to make that argument. They're just saying we're just buying it to hold it, and we have no interest in ranching.
Well, there's two different levels of non-governmental organization, NGO buyers. There's the American Prairie Foundation, which is a nonprofit, but when they buy property, they don't put a conservation easement on the property. So they're not necessarily protecting the land in perpetuity. And the Nature Conservancy has been in that same, this is all taking place in the eastern part of the state, mostly the northeastern part of the state. So at this point, and the Nature Conservancy, who is a world-renowned conservation organization, is actually kind of competing with the American Prairie Reserve now. And, buying some ranches, dividing them to a certain degree, but selling them to neighbor ranchers at a rate, and they put a conservation easement on it first to protect it in perpetuity, and then they're selling it at a discounted price to neighbor ranchers in order to keep these people growing and keeping them viable. So the land is protected in perpetuity when the Nature Conservancy is involved. The other group is Ducks Unlimited. They've been coming into that area, and there's a lot of prairie potholes and water up in that area, and they put a conservation easement on the property and with the NRCS or Fish and Wildlife Service, and then they resell the property at a lower rate to a rancher or a startup family that is trying to start in the business. So there's different motivations behind all of these, but they're all players in the market now. And the Conservation Fund is another group that has been buying land along the Charles M. Russell, the CMR, which we call the CMR Reserve, which runs on either side of Fort Peck Lake. It's a huge wildlife area run by the federal government. So they've been buying things along there to try to add into the Charlie Russell. The Forest Service has also been acquiring land to fill in holdings and things like that here in Montana. So there's competition, not only from the private sector, but also from these other types of entities.
How about Google and Tesla and Oracle? I know Oracle's come to town, and Google, and was it Snowflake, did you say? And a whole lot of tech.
Right.
Was it, what's the new name for it?
Well, the Bozeman area in Gallatin Valley is the Silicon Prairie.
Silicon
Prairie.
So
yeah, so there's a lot of people that have moved in, from California into that area. And when Oracle bought Right Now Technologies, that made a big difference over there, and people started taking notice. And we have a fairly favorable tax structure for corporations here. Not quite as favorable as Wyoming. Wyoming is one of the best states to retire to. It's got a very, very low tax load for people. Their real estate taxes are just almost next to nothing. And they've made so much off the oil and gas industry over the years that they're very stable there. So,
so why would Oracle and Google and others pick Montana over, say, Wyoming?
Well, Wyoming is desolate in a lot of places. I mean, there's some beautiful parts of Wyoming on the, in Sheridan and Jackson and Star Valley and all of that. But there's also parts of Wyoming that are extremely high desert. You can be driving along on the interstate thinking, oh my gosh, I'm in the desert. Well, you're at 7,800 feet and the winters are very difficult there. So, who knows, they might make it there yet.
So what, just as you're describing Wyoming, how would you describe Idaho, Colorado?
Well, historically, Wyoming has been a spillover market for Colorado and for Montana. So when we start seeing a lack of supply in Montana and Wyoming, you'll see these values start to increase in Wyoming because people are heading to Wyoming in the Cody area or Lander, or, you know, some of these areas that are quite beautiful. There are higher elevation, but they're beautiful. And so you'll start seeing people flow into there. Idaho has more of a relationship, I would say, on some level with Wyoming, as far as like in the Jackson area. There's no housing for service workers, so all the service workers have to drive over the pass and live in Driggs and some of those places. And then Idaho is all along, of course, the western border of Montana, and it's quite there's a lot of timber over there, very dense, thick timber. A lot of timber companies are operating in that area, and so we don't see. We have Missoula and Coeur d'Alene, Idaho is very popular. Coeur d'Alene has been one of the most popular places in Idaho for a long, long time. So, but the market's very strong over there in Idaho, just like it is here. So,
Keith, you said a lot of people come to you saying, listen, I want to buy a ranch, et cetera, et cetera. Aside from the $1 million question of what's your budget, what do you want to know? What do they need to know when you're like advising them, or they just, you know, in casual conversation or even more substantial conversation?
I think most of the conversations start off casually, and then as you talk about maybe some of the operational aspects of the ranches and what some of the streams of interest could be, whether it's the recreation of maybe the potential to make money on cattle or not. But they find it a fascinating business. And, you know, I think after, you know, so all of those obvious things that make Montana or Wyoming or any of those states beautiful, you know, investors and people that are either in the money management business or running family offices, they're always looking at alternative asset classes and looking for a place to store value, park money, protect their assets. I think, you know, one of the obvious factors of real estate is that it's finite, and you know, location is key. And you know, Montana in some respects had, you know, components of great location and some not so great locations. Maybe that's changed a little bit. Locations now are in demand, and in demand by different parties and different groups. There are people that just want to ski and have a, you know, beautiful experience for a week or two a year, and there are people that are looking to deploy, you know, tens of millions of dollars into something that they can enjoy a lot or not at all. And so I see a lot of family office, you know, type investors, larger families that, you know, historically have invested in timber, have invested in agricultural ground in the Midwest, moving to grassland ranch investment, you know, looking for very low cap, you know, a decent cap rate, but really a store of value. And if you sort of look at things in an asset allocation perspective, just like I've got my cash and I have my investments that I'm taking more risk with, and you look at your cash and you look at an environment like we're in today, where maybe they're not excited to invest in an equity market that the S&P is up 25% this year, and they have extra cash and they want to put it in some place that they deem would be safe. But if not safe, it certainly has intrinsic value, and it has you know, something you can use. And you see this sort of conversation evolving into, you know, what does it take to buy something of significance where it got a little bit of that income, and Kim kind of picked on that number of 20,000 acres or more. And, you know, you've got a vast piece of America. We're not making any more of it. It's appreciating at some number greater than, you know, 6% a year on average. It's not obviously guaranteed that that'll continue, but if you're sitting in a US Treasury bond right now earning 1.6% and you've got a 4% inflation rate, your money is losing, you know, you're losing money on that cash. And there are a lot of people that say that's just not a great place to be, and I'd rather have it in land. And you know, you can look at that in any state, frankly, but I think the appeal of Montana now becoming, you know, sort of a viable hot market, so to speak, you know, fortunately or unfortunately has been the trend, and that's changing some of the dynamics to that. You know, the good news for that part is I often say, you get an outside investor that comes in, they typically hire local people to run the ranch. They typically spend a decent amount of money improving it. So they're putting money into the local economy. I think many of them are very good stewards of the land. You know, but then the conflict of access to the public and to hunting and Just that dynamic is something that's shifting the course of the conversation at a pretty rapid rate. So there are some of those kind of resistant points too that make it a little bit less appealing, maybe from the Montanans' perspective of seeing these investors come in. But they've always, as I said earlier, they've always been around, and there've always been big families buying ranches. But when you kind of go through those dynamics of, place to store value, do I buy gold? Do I buy, another? It's sort of that. I think that's the kind of corollaries to look at that from that perspective as an investor.
So as far as value, let's just take your region and just compare it to, say, Manhattan. We always know that in Manhattan, Tribeca is extremely expensive. The West Village is extremely expensive. The Lower East Side is a little more affordable, better deals. In that entire region of Montana, Idaho, Wyoming, Colorado, all of that, what's always been the most expensive areas, and where's the value? Like for someone who wants to, where's the introduction to the ranch? Do you need $5 million to kind of introduce yourself to at least a ranch, to understand, sell it, get something else? Give me a sense of that.
Kim, I'll let you take that one and I can add to it.
Okay, well, the higher dollar areas have always been in the western part of the state, where all the scenery and mountains and all that is. And so it just depends on what you're looking for. I mean, I have a contract on a 410 acre place on the Shields River for 3.75 million. And it's a hobby ranch with a fishing river.
How many acres?
410 acres. So, there's, it just depends on what you're looking for.
What can you do?
If someone has $3 or $4 million, they can get into the market.
Yeah, they can get into the market, and that's what's happening. We've seen the dollar per acre price kind of go out the window, and people come in and say, I've got $5 million to spend. What can you show me? Yeah. And you can show them everything from a house in Big Sky on a lot for 5 million to, a rural property, where they could build their own home, or there's a nice home on it that's, probably under 640 acres in the western part of the state. Your $5 million is going to go a lot farther in the plains or, somewhere else. But
the one you named, the 400 acres, it's not big enough to have a cattle operation, but I could hunt and I could fish. And that's pretty much it.
Fish, you can grow some hay and sell the hay, and you can pay your taxes with that, and
ride horses, bikes.
Bikes. Yeah. Go to town for dinner with your family, and
that's still a big parcel by East Coast standards, right? So that about farms around here in upstate New York, and you get a couple hundred acres, and that's a proper farm. And Long Island, we used to have farms of 100 acres. Those are the typical size. When I down in Maryland, the 250 acre farm was about as big as it got.
It reminds me of the movie Giant. They have 300 acres, a horse farm, and they're like, Mr. Benedict, what size is your thing? And he doesn't want to say, and they keep pushing. It's like, but surely, Mr. Benedict, you have 20,000, 30,000? He's like, I have 595,000 acres to be exact. And they all just they're quiet. They're like,
that's right. Well, it's a sort of an unwritten rule. Don't ask a rancher how large his ranch is, because that's like asking him how much money he has in his bank account.
Right.
But I do think that, that if you look at sort of the comparison of what might be Tribeca, maybe the, sort of the Gallatin Valley or Paradise Valley, and those are sort of the boardwalk, Park Place. So that's sort of Park Avenue property. And then, as you start to get, as Kim said, you start to get in some of these smaller towns, there's still some great value and some amazing amenities. You just don't have, a college town or university town like Missoula or Bozeman, which is attracting a lot of these companies, bringing in industry, a lot of infrastructure and support. There's just a vibe. There's good restaurants. It's got all of it going on, and that's those are your kind of hot markets in New York too, where you've got a community, you've got a real presence, and people want to be there. As you get out and into the ranges, and the way I'm sort of behind me is is the start of the western part of the state, and it starts just going west, and it all looks like that. I mean, that right above me is the Granite Peak, which is the highest point in Montana, and that's the view from our ranch. But if I look the other way, it's rolling hills for forever. I mean, for hundreds and hundreds of miles, and that has a lot of appeal certainly from my perspective, in terms of yield and cash ranch investing, that's a whole nother conversation, and one that you could spend an entire episode or two on. But there are still a lot of value to that, and people find it attractive as well. But it is very remote. You're not going to a Starbucks. You're lucky if you get to a gas station within 20 miles or 30 miles, and you have to hole up there and basically camp there and live there and enjoy it while you're there. And people obviously live there and have done that for 100+ years. But for people coming from the East Coast or the coasts or the big cities, that's a pretty rural experience. That's like being in the
Sure.
It's a culture shock for sure, and you don't have cell phone service everywhere and all of that. But I get a lot of things done when I'm driving halfway across the state in my head anyway. So, yeah.
It's got a lot of appeal. On the one hand, I've learned enough from this conversation and talking to Keith that 20,000 acres is a real commitment. The 400 acres you just described, and for only a couple $1 million, it makes sense to me now as a viable alternative. If you don't want to go to Nantucket because you think Nantucket is just a little bit too crowded, is also difficult to get to because you have to make arrangements for the ferry and all that. Once you get there, it's kind of crowded, and you say, the Hamptons aren't what they used to be. Nantucket isn't what it used to be. Palm Beach is really, really, really expensive. Where else can we go as a family and take it down a notch? And what you're describing, Montana sounds pretty awesome. So
It is.
I think it sounds like buying your own private island, literally, because you are so isolated by the space. It's pretty extraordinary.
Yeah, Roberto, I think that's a really good analogy. And a lot of people want that, so it's that's a really good analogy. Thank you for that.
So when I say the word bubble, you don't think this is a bubble. This is not a function of low interest rates, a high, money leaving the stock market from, anxiety over the stock market, an oversold market. I mean, this is not a bubble. I hear you saying this is a long-term trend because you have so many buyers in the market.
It's proven it out over the last 30 years that on as a whole, it's a pretty good investment out here, and there's a different pressure on the state right now. I mean, I've been in this long enough that I kind of listened to my gut. And in 2008, I knew 2007, I could feel something was going to happen. And sure enough, it did, and burst the bubble. But right now, I talk to all my other colleagues and other people that are brokers, and I'm like, I just don't know what's going to happen. There's so much pressure on this market. As you can see from the stats I showed you, they're just, when you're only listing half of what you're selling, it just tells you that it's just a big push. So it may, we might, if rates, the thing is we have so many cash buyers here that don't care about interest rates or loans or any of that. They're just coming in with a big pot full of cash and buying a place. They're putting down cash to close in 30 days. I mean, it's just they do some due diligence and that's that, and so a lot of them don't really care about, interest rates at this point. In fact, most of the larger ranch sales, they're in the past, up until the last 18 months, have not been very leveraged. So the residential market, of course, more of that. But we've also had lots and lots of companies coming in here and buying up all these houses in these towns, from Livingston to Bozeman to Big Timber where I live, and just renting the houses out. So we've got that going on out here, just like you guys probably. So yeah, it's hard to say, but it feels different than before. It feels like we've been found, and they're not going to make any more Montana, and people are going to come and get a piece of it while they can. That's what it feels like.
Beautiful.
So you're a buyer, Keith. You're a buyer, not a seller.
Well, as we had discussed, I think any real estate, and who knows if it's a bubble or not, but I think a lot of what Kim pointed out is probably true. And when the stock market sells off, people oftentimes rush to hard assets and store value. So it could be quite the opposite effect. If we had a correction market, you could actually see money flowing into land, which has happened in the past. I do think low interest rates does drive a lot of this. I mean, from what I can see and what in my own personal experiences with colleagues and friends, they are taking cash and they're buying ranches with cash. I mean, many of them are taking the cash back out after they buy it, much like you see in New York, because they're getting added leverage and returns elsewhere. But it is it's hard to say that it's not a bubble. It could continue to go up over the long term. You have to look at everything out there in years in sort of 5 and 10 year increments, I think, and just safe. You have to, if you buy a large ranch, I think you should be prepared to own it for 10 years. And like owning any island, there are a lot of responsibilities that come with that. And your phone is ringing off the hook constantly from people calling you, asking what to do. But I do think long-term, it's a great place to store value, and the trend will continue on the upside. My one parting comment, I'll say that I did, buy a parcel at one point about 8 or 9 years ago, and it's really kind of the height of that first, sort of 2007, 8 range, and price that I paid was in that level, and it took literally 5 years for it to come back to that price. And just in the last year, has it really appreciated to the point where it's it's well above the purchase price, but it took 8 years. So I'll leave it at that. It's not a guarantee like anything. When you're placing your money, and if you enjoy it and like to use it, then it has other value.
Well, this has been great. I've learned so much about Montana, and I want to go learn more. One thing that we didn't mention, and we don't really have time, is that Keith just bought the T-Rex Ranch. And I said, why do they call it the T-Rex Ranch? And it was because one of the most complete T-Rex skeletons was found on Keith's ranch. And I looked that up, and T-Rex bones are going for some big bucks right now. So if you thought prices were high in Montana already, they find a few more T-Rex dinosaur bones, and
you should see his archaeological expedition that he's got going there.
Yeah, the sky's the limit. Who knows how high Montana could go? A few more bones could be, out of sight. This has been a phenomenal call. Thank you so much for an education on Montana and ranching and ranch land and operations. This is great. Even a guy out there in the Hamptons, Roberto Cabrera, has got to be thinking of turning in his Hamptons pad for an island in Montana. Right, Roberto?
When I get a private jet, maybe.
Fair enough. Thank you so much, Kim.
Thank you guys so much. Really appreciate it.
All right. This was great.
Everyone.
Thank you.
Take
John,
care.
Sailor.
Bye-bye.